Hey traders, it's Rod with Power Group. Today is Wednesday, September 16th. And before we jump into the video, make sure to like the video. It will show me some support, and consider subscribing and tick the little bell and you'll be notified on any future updates. So on the list today, I want to discuss in today's video a few things on the schedule today. So we're going to look at some news and events. We're going to talk about the FOMC meeting that just happened and the press conference that came afterwards. So the FOMC update came at 2 p.m. Eastern time, and we saw the press conference at 2:30 Eastern time, and it lasted, just finished not that long ago, but a half an hour ago, just about an hour after market close. So we'll discuss the economic data tomorrow, and we'll also touch briefly on the quad witching on Friday. So essentially a dividend distribution for SPY, but give that a quick Google if you don't know what that is. But essentially it's going to be monthly OPEX. It's going to be an interesting week for calls and puts, and it's a possibility that they could be burning the calls here, and this could still potentially be a bull trap, which we'll dive into in just a second. But I wanted to highlight FinViz. So as you can see, we were fairly mixed across the board today, but the technology sector was hurt pretty bad. And I did a video yesterday. It was actually on a Hexo review and product review. And I also did a daily market recap yesterday. And I said that MJ was holding up a little bit better than the rest of the market, which it held up better again today, but we'll touch on that in a little bit. But on my daily market recap video from yesterday, I pointed out that Amazon, Apple, the QQQ tech sector were all showing very, very bearish signals. And that was the title of my video. You can check that out. Just go to my channel and search bearish signals, should come right up. And it was the second last video after this one that was posted. So taking a look at the FOMC, so they vowed to keep interest rates near zero. That was one of their tools. So a lot of analysts were commenting, well, why aren't you coming up with other tools? Why are you just prolonging the inevitable, kicking the can down the road? Essentially, they're just trying to prolong it as long as they can. It's a liquidity-driven rally, and I think the Fed is just trying to make people hear what they want to hear, which is buy stocks, it's going to keep going up kind of thing. And they don't really have any other plans. And he even said, if you watch the press conference, he even said that nobody at the FOMC has any experience with this type of thing before. So that is a red flag for me. And we'll dive into the charts in just a second. We'll see what happened leading up and after the Fed. And they also said that they wanted to target inflation of 2%. That hasn't changed any. And unemployment, they are targeting about 8%. So you can check out that article on your own for more information, but I did want to highlight that tomorrow we have the economic data here. So you can see we have the initial jobless claims tomorrow. They're projecting 850 versus 884 last week. So we'll have to keep an eye on that, but SPY and the overall market definitely closed weak today. So tomorrow, very important for economic data, and Friday's quadruple witching and the SPY dividend. And also, Snowflake wanted to mention that the Berkshire Hathaway and Warren Buffett backed new IPO has raised the largest amount in 2020 in the biggest ever software debut, and they're a cloud data software maker. And it's doubled its trading debut, opening at $245. It traded up more than 276. So that's some huge volatility that we saw just in the beginning there. And you can see Amazon only raised $3.4 billion in the year's biggest U.S. initial public offering. Snow sold 28 million shares Tuesday at 120 apiece after being marketed at 100 and 110 apiece. So you can check out that, look into Snowflake a little bit more, but we should expect some hype in regards to that for the next foreseeable future. So next on the list, we'll take a look at the indices. So one thing I wanted to highlight just before we get into, actually, I'll start with SPY here. So you can see on the daily, we had a very bearish day. We closed near the low of the day. We didn't break the low of yesterday, so not completely game over yet for the bulls, but 338.47 and 338.52. So we held that low, and EMA 26 support, which is 338.92. We did close just below that, But again, this is another red flag for me. If the FOMC is saying they're going to keep rates near zero for the foreseeable future, this is the last FOMC meeting until the US election, what else is going to move these market bulls higher? Because we've seen declining volume, no bull volume. We dropped about almost 10%, so 8% on SPY. And if we were still in a huge bull and buying frenzy, maybe we're just running out of buyers. Why aren't the bulls stepping in here? Why aren't we seeing any volume? And I think it's because we're starting to run out of buyers, and the scales are starting to tip. And like I said, today was all the reason. Burden of proof was on the bulls today, and they had every reason to march to new highs. We even broke above the prior resistance here, which was at 342, 53, 46. So since this dump, we haven't been able to get over 342. So we did get to 340. We got to 343.06, and you can see the upper wick and the nasty reversal and close near the low of the day. We are holding EMA support, like I said, but that's a big red flag for me that we basically had a fake out, and this could potentially still be a bull trap, because if we draw out the Fibonacci retracement, you can see here that the 382, we're still flirting with bear flag territory. Now, I know it's not the exact, the bear flag kind of played out here. It's not the exact, ideology of what we would want to see for a bear flag, but the concept is still there. And like I said, we closed near the low of the day, very, very bearish. Towards the end of the day, we lost the hourly uptrend as well, closed underneath the Bollinger Bands. See that we had huge sell volume into the end of the day. And 15-minute huge volume. You can see we had increasing bear volume to end the day. And like I said, we just see these slow grinds up and these huge moves down, and they flush it way harder and faster. And it's been a pattern that I've been watching for quite a while now, and I'll continue to watch that pattern. But as you can see, into the end of the day, still a 5-minute downtrend. So we're looking fairly bearish right now, in my opinion. The only thing, we'll take a look at the weekly on SPY. You can see the MACD almost crossed today, but we are holding that 10-week moving average. Taking a look at SPY on the daily, so we have the 50-day moving average at 333. So we could still potentially look to continue to form that basis of support there. So if we do get a gap down or we see some selling pressure into tomorrow, then that's what we could probably expect for that. But SPY, certainly bearish in the short term, and we'll see if bulls can come out tomorrow, and we'll have to watch the economic data as well, as that's going to be very telling. And before I jump into some other sectors, I did want to mention UNG. So I did bring that up as well in my video, my daily market recap video from yesterday. But essentially, this still could be a daily bear flag. I know a lot of people that were trying to get into it. You can see that the EMAs are crossing bearish right now. It could still potentially be a daily bear flag. So if we see this play out, it could look something like so, which would bring us down here to the 1090 level if that played out. And you can see that from the top to the low, we're still just around the 382 retracement. So this could very well be a daily bear flag. We didn't break the low here, which was 1206. So you could potentially play off an entry there. I'm going to be sitting this one out, to be honest with you. We also have support at 1188, but with the EMAs acting as resistance, bear cross potentially forming, and a potential bear flag, and SPY, the way SPY closed there, that's just not something I'm interested in right now. Maybe if we get extreme, we'll have to see, but depends on your risk tolerance. It's not, it's pretty close to support, so you could make the play off support, risk potentially 2-3% to make upwards of 5 or 15%. So it all depends on your risk tolerance and your long-term investment horizon. I know a lot of members and friends have been asking me about UNG and natural gas, whether or not they should buy it, but potentially I would say hold off for now, especially given the weakness in the close on SPY today. And I did want to bring up Bitcoin here really quickly as well, because we saw all sectors start to trend down, but Bitcoin here to start the day, you can see here we had a hourly ascending triangle. So I bought the break on Bitcoin here on this ascending triangle. And so as soon as we broke this high, I used the wick here. I was playing conservative. So as soon as we broke the high of 10,955, I was in long, and I sold when we touched the 11,000 mark. And I'm basically setting stops right now on crypto. Crypto looks very, very bearish as well. So taking a look at, on the weekly, we'll take a look at BTC. So you can see on the weekly, we've crossed below, we managed to regain it here, but we closed below. MACD crossed and stochastic crossed on the weekly. Very, very bearish. And I think there's going to be some more downside to be had. We saw gold pull back, which I'll bring up in just a bit. But we do have the 50-day moving average here, which could potentially act as resistance. That was my profit taking point. Once I hit 11,000, I exited that position that I entered bullish, and I'm still swinging my core position. But my plan was to hold it long term. But you know what? Given the weakness in the sector, in the broader market, and in gold, and these macro weekly long-term indicators, I decided to ride this hourly uptrend. So as soon as this hourly uptrend breaks, if we set if we set a lower high and lower low and confirm a downtrend and we break, I'm using the previous hourly higher lows as my stop. So it doesn't really matter if we form a downtrend. I'm using the previous higher low as my stop. So I'm just riding that up. And as soon as that happens, I'll get stopped out and I'll look to reload cheaper. So next on the list, I did want to highlight on SPY as well. I forgot to mention that on the 5-minute, we were rejecting from EMA 12 resistance right from the high of the day. So you can see that we had a 5-minute bear flag and we changed the 5-minute trend bearish. And after that, so we had the FOMC reaction today. So right out of the gate, we saw a 5-minute downtrend and we saw a huge V-shaped bounce into a slow fade into the FOMC. And what I found interesting was this 5-minute downtrend right into a V-shaped recovery, again, which we were seeing at the height of the bull market. But what I found interesting is we were close to changing that hourly trend here going into the FOMC. So you can see we were looking for hourly higher low, but we had a hourly lower high, and we held that essentially a double bottom. We had a low of 340.32 and 340.42. We had a higher low and higher high. We changed the hourly trend bullish. And then now you can see that the EMAs are curling bearish as well. And we lost the hourly uptrend, flushed down on just poor economic outlook. I think that the press conference, and I'm not sure if there's any other news that was driving this. To be honest, I had a look. I didn't see anything. Let me know in the comments below if you found or come across anything that may potentially have been something that I missed. But as far as I can tell, it was just, I watched the press conference afterwards, and it was just, they were asking a lot of questions that weren't really that clear. They were very ambiguous answers, and they didn't really seem to have, and like I said, they don't have any experience with this. And a lot of the economic recovery is going to depend on the stimulus bill and the virus, right? So personally, I was just using EMA 12 support. I made a couple plays today. Like I said, I traded Bitcoin. I made some money off a Hexo entry, and I sold that one, but I have a core position that I'm building as well, but it was just a day trade. I also entered, I exited my SPY short, and I went long, and then I flipped to short again, and then I sold most of my shorts into the end of the day, but I'm still swinging quite a bit overnight, and sitting mostly in cash with some MJ companies as well, some Hexo, some CWeb, and some Canopy. So taking a look at, and QQQ had the same thing. So taking a look at QQQ, we had the exact same thing, 5-minute bear flag, 5-minute downtrend, the EMA 12 resistance. So if you could have just used that as your visual guide. But what gave me confidence with SPY was when we didn't change that hourly trend to a downtrend right before the FOMC meeting, I had a fairly good idea that it was probably going to slow fade into the FOMC and then we'd see a bounce. And then, like I said, I didn't really, nothing that they said was really that different or any new information or any new tools that they introduced. So I was skeptical. And then I was also watching that 342.76 and the fact that we haven't closed over 342 since this dump from the all-time high. As soon as we started to pull back from there, I shorted it again. And then once we lost the support here of 339.02, I knew it could likely get extreme. And then looking at other sectors, we were starting to see everything get extreme all over the place. So it gave me confidence to hold a little bit longer. And I trimmed toward the end of the day in the mid 338s. And next, I wanted to talk about so we did have an hourly downtrend on SPY to start the day. But like I said, we kind of just chopped around and then we confirmed an uptrend and then we broke the uptrend and lost the uptrend. And then now we're looking to potentially set an hourly lower high. That's all we'll be looking for on this bounce. So anything under 343.06 will be a lower high. Could we potentially see an equilibrium into the rest of the week? We'll have to play it by ear, but like I said, EMA crossing, definitely a bearish sign as well. So taking a look at Hexo, I did want to bring this up very quickly. So you can see we are just looking for an hourly high or low. Actually, we did form an hourly lower high and lower low. So that did end with a downtrend to end the day, but I believe we're still in a daily uptrend. Yeah, still in the daily uptrend, finished with a doji essentially. And we're still closed at 75 cents. So we're still strong. We don't have any daily resistance up until the 83-cent level. So held up relatively well in the face of SPY today. And taking a look at Canopy Growth, again, holding up relatively well, only down, it was up 0.37%. And like I said, SPY down almost 0.5%, QQQ 1.5, 1.6%. So MJ definitely holding up better than the rest. And I think that is because of the correlation to XLF. And as you can see, XLF had a much better day here on that, looking for a daily higher low. And we almost formed a higher high here. We did have a lower high and lower low, so it was a downtrend. We had the high, the low, and then basically a double top, I'll consider that. And still looking for that daily higher low. So looking at the hourly, you can see here, we were in an hourly downtrend. Now we're just looking for an hourly higher low and higher high. That'll give us confidence that the daily higher low is set. So again, I highlighted that Amazon was giving red flags yesterday. Amazon very, very weak today, could lose 3,000. You can see here that we had a pretty big range, and I'll go over the chart in just a second. But like I said, those MACD and the stochastic on the weekly are very, very trustworthy indicators. And I knew that we could probably see some weakness in the QQQ and the tech sector today. But as you can see, we lost the 50-day moving average. Next is the 100 down at 28. We could easily fall to 28, 2,900 on Amazon going into the rest of the week. We'll have to keep an eye on that. And also this SPY, there's a lot of lines on this here, but I didn't clear this up toward the end of the day because I was using multiple browsers. But you can see that we're still potentially forming a daily head and shoulders on SPY as well. So pattern that I'm watching, and I'd really like to get to 319, 320, 321 on SPY and potentially switch long there. I'm not very impressed right now by the bulls. And you can see here that we had a daily uptrend here, this white line that was broken. So another bearish signal. Let's take a look at some other. So IWM, I'm going to go through these real quickly. Huge upper wick, bearish reversal candle on the daily. So we have closed a little bit stronger than SPY. Taking a look at NQ, basically a bearish engulfing candle. Same here with SMH, closed near the low of the day. So semiconductors, Taking a look at DXY, so you can see here we're still potentially forming that inverse head and shoulders, and we closed the day fairly strong with a lower wick, definitely in favor of the bulls, and with a 5-minute uptrend into the end of the day, and then a 5-minute EQ. So we'll look to see how this EQ breaks going into tonight's future session. So again, QQQ, close near the low of the day, pretty much a bearish engulfing candle, very, very weak SPY, very, very weak, close near the low of the day. I did want to highlight that SPXS, which is the bear inverse 3x leverage ETF for SPY. You can see that we're potentially forming a daily bull flag. So if we draw out the Fibonacci here, you can see that we did hit the 0.5%. So chances are, if we ignore the wick, we could potentially still be a daily bear flag or bull flag. My apologies, but we did break the high of yesterday, which was 569. So the daily bounce is underway. We closed near the high of the day. Anything under, we're just looking for a high of 612, which was the recent high. So anything under that would be a daily lower high, but we will expect that is quite a bit away. I mean, we're looking at about 7%. So what I would expect to see in most probable scenario, it's a little too much, could potentially see a higher low and higher high, but all about the economic data going into tomorrow. And also SPXF on the weekly starting to show signs of some bullish momentum. You can see we're curling up on the MACD, curling up on the stochastic. And the last thing we need to do is just break through that price resistance on the 10-week moving average, which has been resistance since April. That'd be very, very notable if we can close above that. And if we can also close above 616, which is the 50-day moving average, which has been acting as resistance also since April. So some nice confluence there. Taking a look at US oil. US oil had a very strong day, so not surprising given the fact that we're in a daily uptrend and that we saw such a huge flush out of that daily rising wedge. No resistance, so that's what happens when you start to see, but definitely expecting a daily lower high compared to the recent high here. We'll use, say, 42, 43 level. So anything under that is just a daily lower high, and we could potentially see oil extend the gains. It did close near the high of the day. Taking a look at oil on the hourly into the end of the day, hourly uptrend. Taking a look at the 5-minute. So while everything else was closing weak, oil closed near the high of the day, could potentially be a ascending triangle on the 5-minute. So keep an eye on that as well into this evening. Taking a look at UNG on the daily. So you see here we broke the inside bar bearish, and we came down here. Like I said earlier, we didn't flush from support, or we didn't break that support of 1206. We hit a low of, actually we double bottom 1206 and 1206. So that could have potentially been a nice entry. We'll have to see how this plays out tomorrow. VIX. So getting a bounce going. We did break the high of yesterday, which was 26. We had 26.59, a little bit of an indecision candle there, but some upper wicks. And we'll have to see how the volatility index plays out tomorrow. Taking a look at silver. So you can see here, we're forming a doji, a little bit of an indecision candle. And on gold spot, you can see that we have the upper wick. So definitely favoring the bears, but essentially had a fake out there and a nasty pullback as well going into the end of the day. You saw we had some huge volatility and an hourly downtrend into the end of the day. Taking a look at the 5-minute downtrend. Actually, yeah, 5-minute downtrend, but we're looking at a 5-minute EQ here now. So we'll see which way that breaks. And I'll cruise through these. So the biotech sector was a bit stronger today as well. You can see here we had an upper wick, so definitely wasn't spared from the rest of the market sell-off as well. XLE, the energy sector, was very hot today based on oil, as we talked about. And we did finish with an upper wick and closed below EMA 12, which is looking as looking to act as resistance. Taking a look at XLF, the financial sector. So again, it was a lot stronger today, finished with an upper wick. And I believe that's why we saw a bit more strength in cannabis and those stocks, especially the Canadian side. So taking a look at XLF, you can see that we're looking to form, we did form a higher low and we're looking to form a higher high, essentially a double top again, and just looking to confirm and reverse that trend and go into an uptrend. XLRE Real Estate Trust Fund. So this is another ETF. We hit the high of the day and then we pulled back pretty nasty. You can see here we pulled back quite a bit from the high of the day, pulled back about 1%, and into the end of the day, you can see that we ended with a 5-minute downtrend. Taking a look at XLV, the healthcare sector, broke the low of yesterday, just looking for a daily higher low, and anything over 103.79 will give us that daily higher low. All right, that was a lot longer on the indices than I planned, but hopefully you guys got some value out of that. I'm pretty sure that's all I had to mention on that section for now. And next we'll talk about some individual stock analysis. So as you can see, Apple closed near the low of the day as well. I did highlight that Apple in the tech sector was very weak. We have the EMAs crossing here on the daily, which would be a bear cross. We broke the low of yesterday. We could potentially be setting a daily lower high and a lower low to continue this daily downtrend, and not looking good for the Apple bulls, not at all. So the event from yesterday was sort of lackluster. Not too many people reacted bullish from it, so pretty much a flop. But again, this is just what happens when you run out of buyers. But we did hold the 111 mark, which was nice to see. But we'll see how we gap down and end the week. But you can see the MACD is just barely trying to cross. And on the daily, still has the 50 here as support, which is at 109.98. Next on the list, we'll take a look at Tesla. So Tesla at the end of the day, again, saw some profit taking and upper wick. Just looking for, we have a daily higher low here. Did we change the trend? Low of 360.56, 360.50. Could technically say we had a mini higher low and higher high in the daily uptrend, but not enough in my books. Toward the end of the day, you can see we had an hourly lower high and lower low, downtrend into the end of the day, and then potentially looking to set this equilibrium to see how this breaks, and potentially look to set a higher low and higher high, change the hourly trend. All about how the QQQ and overall sector opens tomorrow. And at the end of the day, we were in a 5-minute downtrend. Now we're just looking for a 5-minute higher low and higher high to confirm that uptrend and to be confident that the hourly higher low is set. Next is NKLA. So we saw a bounce in NKLA the past couple of days, and short sellers definitely feeling the squeeze. We did break the low of yesterday, which was a low of 32.06. We had a low of 30.25, and just looking for a daily higher low to potentially be followed by a daily higher high and a daily uptrend. So closed at 33.28. After hours, 32.95. Taking a look at the hourly chart, just looking for an hourly higher low. Could potentially be an inverse head and shoulders on the hourly as well. Something like that, the neckline right around there. So we'll have to see how that breaks tomorrow. We'll see if that can translate into a hourly bull flag and trend change and confirm the inverse head and shoulders. And in the end of the day, we had a 5-minute downtrend. So we did form a higher low and a higher high, but we did lose that uptrend in after hours. Next on the list, we had Oracle. So Oracle had the TikTok news, as I mentioned in yesterday's video. And taking a look at Oracle on the daily, we had a bearish candle today. Bulls did buy the dip a little bit, but we still are outside of the Bollinger Bands on the daily, weekly, and the monthly. So I'd definitely be cautious on this name. We could see some downside and a potential sell the news event once they do strike the deal. So again, not trying to predict the future, but something to watch out for. You can see here we basically formed a cup and handle, fail into a low of the day and closed bearish. 5 minute was in a 5 minute downtrend, huge lower wick. We'll have to see what that's about tomorrow, but we are up after hours and you can see the EMAs are curling. So definitely going to be watching those 4 names tomorrow, especially the tech sector and QQQ. So as a summary to today's video, it's been a little bit longer than normal, but I did want to go over just where everything stands, because everything was trending lower at the same time, and we could potentially be setting up for a gap down. It's all going to depend on the economic data tomorrow, but again, you can't be going to sleep, and you can't be getting complacent, because if you look at that FOMC reaction today, you can see that we bounced up, we slow faded, we rocketed up on the basically no bad news, but no real new news that we didn't already know. We knew that they were probably going to be keeping rates at 0 for the foreseeable future, but it's basically just confirming what they had already confirmed. And then we saw, you know, how many candles did that take for us to play off of support? So 12 bars, and then to get back down to that exact same level. Is that not working for me here? We're looking at 7 bars. So these flushes are happening a lot quicker, and the momentum is definitely to the downside. You can see we're up after hours, 339.40. So check back in tomorrow for another daily market update. That's pretty much all I have for you guys. Again, this could potentially still be a dead cat bounce. And we have, for me, the most important level is 343. So if we can close and hold above 343 and stay there, then bulls could potentially make a run for it. And again, a stimulus bill would give bulls more confidence and more of a risk-on atmosphere. But for right now, I'm remaining conservative. I suggest you do the same. Make sure you use a stop loss, have a game plan. Again, it's Rod with Powell Group. Make sure to like the video if you enjoyed this content today. Subscribe to the channel. You'll get the next update as soon as I have the next video out. And we'll check back with you guys tomorrow for another daily market update. Have a great rest of your day / evening, wherever you're tuning in from. Take care.